Wall Street has a bold agenda. The clock is ticking. They're referring, of course, to you, and that was in May. Is this announcement bold as far as you're concerned, or should we be expecting something more in the kind of remaining time before this election?
Well, I think it's consequential. I'll put it that way. I mean, we have 58% of American households that are invested in the stock market. This stock market could get more competitive, meaning lower costs. And so I think it's consequential. And I'm really proud of what we're doing here for investors. I also think it promotes capital formation if you narrow the spreads for those in the middle, the broker dealers. Now, you could go to a half a penny for, we estimate it will be about 3/4 of the share volume could be quoted in narrower spreads.
Sorry, neighbors are
and
just getting
lowering
a little rowdy.
the fees, these so-called access fees for the exchanges as well. Well, look.
What's going on, guys? Sorry, the neighbors were getting a little rowdy. What's going on, guys? Sergio, Jim, retired today. Nice name. Surf, Mark, Francisco, Shafiq, what's going on, man? Olarin, Finn. What's going on, guys? Hopefully you can hear me loud and clear. How's the weather in Italy? It's amazing. Well, I mean, Italy's a pretty long country, but in Sicily, it's amazing. So yesterday, the SPY did hit an all-time high. If we take a look at the daily, you could see that yesterday. And QQQ is still a little lagging behind in terms of how far down it is from highs. QQQ is still about 5.5% down. That's the NASDAQ. For those of you that follow me on X, by the way, follow me on X and on Instagram for free daily trading and finance content. And then on Instagram, obviously, I post a lot more personal stuff like travels and whatnot. But I posted this chart and I said that at least on the NASDAQ, these bullish haramis tend to mark the bottom of corrections. We saw that here back in April, and we saw that again here back in September 9th. Now, this was a couple days before CPI, and I said if CPI comes in line at 2.5, which we can argue later whether that's a real number or not, but if CPI comes in at 2.5, then I think this will mark the bottom of this correction. Now, this is the first S&P. This is the first FOMC where I don't really have a good handle on what's going to happen. Every single FOMC since, when did the Fed start hiking rates? Since June 2022, I believe. Someone correct me on that. But the first FOMC since June 2022 where I have no idea what the Fed is going to do. Honestly, and I mean that honestly. And it is wild that just a week ago, there was only a 14% chance based on CME futures that the Fed was going to cut 50 basis points. Now it's 63. If you watch my previous videos, the reason for this is because of the softening labor data, but it's not like unemployment came in super high or anything. You know, it's a bunch of NFP, non-farm payrolls, ADP type of data. And I don't know. Based on my reading and based on my experience, being involved in hiking and cutting cycles, I personally didn't think that it was enough to warrant such a strong favor towards a 50 basis point rate cut, but that's where we are now. So 63%, 50 basis point rate cut. Now, the one thing that Powell did say during Jackson Hole, the one thing that Powell did say was that he's not looking for the labor market to soften any further. That's as close to him stating that he's worried about the labor market as possible, right? But he said it in the most tepid of ways. So that could lead me to believe that they go aggressive here and then maybe halt in November, or halt or do one more in November and halt in December. But, you know, this is the first impression. This is the first strike. Now, what's also ironic is that if you look back in 2007, and if you look back, I posted this as part of my analysis in the Academy, in the Discord. But if you look back to January 2001, we did a 50 basis point rate cut. Market rallied 5%, then dropped 44%. 2007, market rallied 5% after a 50 basis point rate cut. And ironically, same exact day as today, September 18th. 17 years ago, exactly to this day, market did Fed did a 50 basis point rate cut, and we had a 5% rally and a 57% decline thereafter. Now, the other thing that I was hoping you guys would take away from my videos is that a black swan and a recession are not necessarily, they're mutually exclusive, right? So you can have a recession without a black swan. As a matter of fact, we've had many technical recessions in the past. Does not necessarily mean that we have a dot-com bubble or a housing crisis bubble. The other point that I was making in my videos is we did have a black swan in March of 2023 that cracked under the boot of the Fed rate hikes. That was the bank failures. 400 and some banks failed in 2023, along with names such as First Republic and Silicon Valley Bank. But the Fed and the Treasury came in, created a brand new program overnight that basically said, we will print endless money. Do not worry. Depositors' money is safe. So in my view, that was our black swan. In a pre-2008 world, that would have tripped the economy into a major recession. We would have seen bank failure after bank failure continue. We would have seen bank runs where people are rushing to pull their money out, and things would have looked just as bad as 2008 or 1929 when people are rushing to the bank demanding that their deposits come out. Now, it might not have happened at JP Morgan or Bank of America, but it certainly would have happened at all the small banks, and all those small banks would have went insolvent. So anyway, if anyone asks me what do I expect or what's going on, I'm just going to tell them to rewind, because in my opinion, that was a really good preamble to what we're about to see today. Yeah, dude, Carlos, what the fuck did I spend the last 15 minutes just saying? SPY made an all-time high yesterday anyway. So, what happens today, I wish I could just ban people from the chat, because it annoys me to no end that people overreact like little pansies on every single candle, right? So the Fed is going to release their decision at 2 p.m. Eastern in 20 minutes. We're going to know if it's 25 or 50 in 20 minutes, okay? And then Jerome's going to talk at 2:30. The market is going to give us a manipulative move initially. Then Jerome's going to talk. We'll get another manipulative move, and then we'll have the real move of the day. But obviously, as we've seen time and time again, what happens today does not mean that's what's going to happen in 5 days or 10 days, okay? So please, if you are a pearl clutching softy, don't, comment with every single candle move. Why is the market going up? Why is the market going down? Why is the market going up? It's going to manipulate twice today, at least, okay? And the end result of today, it could be down, the Fed could cut 25 basis points. It could be down minus 3% today, and we still go to all-time highs next month, okay? So what we are looking at on the chart, the only reason I have the chart up is so that we can day trade. That's it. I'm not looking at the chart to tell you this is a bullish move, this is a bearish move, sell all your stocks, or quick buy all the stocks you can. It's literally just to day trade, just to find a move today. It is not an indictment on what is going to happen for the rest of the year, okay? Let Jerome Powell... Oh, this looks like a potential short here. Wait, when is the Fed meeting? 20 minutes? This looks like a tiny short here. I wish we had SMT. Do we? Where are we on the higher time frame? Okay, so we swept that. Oh, we do have SMT. Yeah, I think this is going down here. I think this is going down to somewhere down here before the Fed. NQ is the weaker one, but we do have SMT from 9:30 open. Do we have a macro? Ooh, what time is it in the US? 150 macro is coming up. I think there's a short-term short here. With NQ being the weaker one. Wait, what was I looking at just now? Yeah, NQ making a lower high. And ES making a higher high on the hourly. Yeah, the next macro is at 150, which sucks because the Fed release comes out at 2. So you will be dead smack in the macro. So unless you're in a gambling mood, do not take this until 2 p.m. This will likely just be a scalp anyway. Yeah, let's wait until Uncle Jerome releases the decision. At 2. Before doing anything here. We do have that SMT, and we are coming into a macro. On this smaller time frame, you do have a bunch of imbalances up here, so it could definitely come up and swipe some of these imbalances up here. But yeah, let's wait until long, short. Do both, bro. Go long and short. Tell me how it works. Gold. Yeah, I want to look at gold too. So gold made another all-time high today. Oh, you know what I wanted to check out was CL. This is... Wait. Yeah, this is the type of rejection I'm talking about. But because the data drop falls in line with the macro, you're going to be right smack dab in the middle of it. So not a good look. But this is very, very, very short-term bearish in my opinion. And honestly, you can only play it down to maybe this level here. $12 minutes to the Fed decision. Yes, there's a macro at 150. I want to see the extent of this move here. Like, I think we get down to maybe there. Depending on which one does it first, NQ or ES. Gold. Yeah, I mean, gold just made a new all-time high 2 days ago. I don't really have an opinion on gold here. But okay, here's my opinion on gold, okay? If rates get cut by more than 25 basis points, then the dollar is going to go down along with rates, which would potentially give gold another rally. So how many of you scalped this? Can you check EWZ? No. Remember, I think we get two manipulative moves here. We'll get one at 2 p.m. We'll get one at 2:30. And then potentially a real move thereafter. I just told you about gold, bro. Stop asking the same thing over and over again. Okay. I missed that. So rewind it, dude. You have a fucking rewind button. Don't waste everybody's time. When you say move, up or down? How would I even know what Jerome Powell is going to do? Very nice scalp there. Very nice. How do I even know what Jerome Powell is going to do? How could anybody tell you that? I don't work for him. How could I know that? Everyone wants to know now because they're trying to buy calls or puts right now. That's why. They think they're going to make easy money from some sort of fortune telling here. And that's not how it works, man. You lost some money? Why are you so mad? I didn't. I played that scalp exactly. That's my thesis right there. I told you that we're going to see a short to that level. Can you talk about gold? I'm going to start putting people in timeout, man. Kenny, thank you, man. All right, so got a scalp there. I told you would see a little drop to that level. Not anything huge, but a good start so far. I haven't traded at all today. That was my first trade. Kendall says, I'm not a bot, you tool. All right. Is gold a good investment? You're late, bro. It was a good investment last year. TLT or TMF? I think you're late on that too. We started buying TLT back in November of 2023, almost a year ago. I think you're really late on that. I'm telling you guys, there, November 10th, I did my whole analysis on bonds. TLT was $87.50 back then. But I think you're a bit late here, to be honest. Juan, what's going on, man? Z took a 10K trade on GC last year. It was 14,000. Big players already know the decision. Market not tanking. That means we're gonna. Romizi, thank you, man. Thank you for your donation. Appreciate it. Thank you so much. All right. We got our ES scalp. We are in the macro now. NQ still holding up. I would take profits here and wait for the results, which will come out in 4 minutes, guys. 4 minutes. What's your TP for TLT? I don't know. Sometime in 2025. What's the breaking news?
Said Kelly Evans, I'm Tyler Matheson from Washington today. We're just minutes.
Are you long or short? I took a short off of this and I closed it. I would not be in a position during FOMC. I think you're late on IWM. I think you're late on TLT. I think you're late on gold. Will you trade NASDAQ? I already put in a trade on S&P. Do you follow Euro USD? No. I don't trade Forex. Guys, you're going to see both moves today. All right? You'll see both moves. It's gonna manipulate up and it's gonna manipulate down. Remember, there are two events today, not one. Jose, do what you like, man. I took the trade because I wanted to take the trade, and I know how to trade, and I don't need to listen to you. But there's two events today, right? There's the FOMC release, which that's going to be at 2 p.m. And then there's the Fed conference at 2:30. So you're going to see manipulation in both directions. Don't ask me in what direction, okay? We have to see what the decision is first, which way the market manipulates, and then we'll go from there. But there's two events today, right? People tend to think of FOMC as one event. It's two events. There's the release in 2 minutes, which is coming out in 2 minutes. And then there's Jerome Powell's testimony at half an hour later. So Jerome announcing that central bank is shutting down. Y'all funny. What do you think about DJT? I don't treat the market like a casino, man. Not my type of stock. Oil, we had a monster trade on oil. I posted it in the swings alert last week, but took $3,100 per contract on CL. It was my biggest oil trade of the year so far. $3,100 per contract.
It's a bigger problem down the road. But the other side of the risk is that if they do go too fast and inflation then starts to perk up a little bit too high, then I think they've basically signaled to the market that they're very aggressive and that this could create a bigger problem down the road. So in my view, I think 25 basis points on a risk-adjusted basis is more warranted, but that doesn't mean that a very good case could be made for 50.
All right, Jim, thanks very much. We'll come back to you in a very short time, but we are just seconds now away from the Fed's decision on interest rates. And for that, let's go to Steve Leisman.
50 basis points, the Federal Reserve cutting interest rates by 50 basis points to a new range of 4 3/4 to 5%. There was one dissent, Fed Governor Michelle Bowman preferring to cut by 25, but 11 voting in favor of 50. It might have been close. I'll come back to that at the end of this report. The statement says the committee will consider additional adjustments to policy based on the data, the outlook, and the balance of risks. The summary of economic projections saying an additional 50 is expected or forecast by the median Fed member for this year, for a total of 100 this year. That would bring the median down to 4.4%, or an additional 50 basis points from where we are right now. Another 100 basis points of cuts expected through next year, bringing the rate down to 3.4%. All of that a bit above where the market is priced. And the new long-run rate would hit 2.9%. That's up a tick by the year 2026. The statement now says the Fed is firmly committed to supporting both maximum employment and the 2% inflation target. Before and for many months before this, the Fed had relied solely on saying it was focused on the inflation target. The committee has gained greater confidence, the statement said, that inflation is moving to that 2% target, and risks to both sides of the mandate now are said to be roughly in balance. On the economic description, the economies continue to expand, it says, at a solid pace. Job gains, however, have slowed. Inflation making further progress towards 2%, but remains elevated. It's seen declining to 2.3% this year, 2.1% next year, and hitting the target 2% by 2026. Unemployment, the outlook for unemployment did tick up. I think that's important to what the Fed said here and what it did. Up 0.4 to 4.4%, 2 ticks higher than it is right now. Growth pegged at 2%, slightly above the 1.8 potential, well into 2027. Now, 9 officials in the dot plot wanted to do 75 basis points or less this year, and 10 wanted to do 100 or more. So it may have been a very close call as to what was actually wanted around the table in terms of 25 or 50 today, but they decided ultimately with 11 voting in favor of the 50 basis point rate cut. Tyler.
All right, Steve, stick around as we get back to our panel for some reaction. Claudia, you were the one who said 50 basis point cut, and that's what happened here. Clearly, maybe more emphasis on what's going on in the labor market than on inflation.
Right. This is absolutely a vote for the dual mandate. And so trying to protect maximum employment. You know, things are good right now. They're not pointed in a good direction with the labor market, but that's why you get out ahead of it. So this is a risk management, and it's showing that the Fed is taking the risk on the labor market side very seriously, and that also shows up in the projections, right? They are trying to move. This is not the last cut. So it's a really important recognition of what we've been learning about the labor market, and the Fed is reacting.
So, David Kelly, they're opening big, and you think that another, you said that by the end of the year we would be 3/4 of a point lower than we are today. That would imply then that there would be 2 more cuts of 25 basis points, or at least one.
Yeah, no, I think we probably will get two at this stage. I mean, I would have preferred they went 25 basis points today. Obviously, it's a very close call in futures markets. But the important thing to recognize is that cutting interest rates at the start doesn't stimulate the economy at all. There is a J-curve effect. It actually slows the economy because people begin to anticipate those lower rates, so they want to wait for lower rates. It tells people that the Fed is scared about unemployment. I don't think they really should be, but that's the message it gives, so it undermines confidence. The reason I thought, bringing rates down from a high level is like, bringing a piano down as a flight of stairs. You've got to do it very carefully and very slowly. That would be the right way to do it, and I'm a little worried that they've started off in a rush here. But I do think this economy is strong enough to deal with it. I think we will, next year, I think we'll get 2% growth, inflation 2%, unemployment close to 4%. So I think it's still a healthy, strong economy.
Does it risk in any way, Jim, reigniting inflation?
Look, I mean, to some degree, it certainly could, but it really depends on what happens to the labor markets. Look, I see this as a 3-dimensional problem for the Fed. Number one, where do they see the neutral policy rate being? Number two, how quickly do they want to get there? And number three, what is the employment situation? Is the employment situation going to deteriorate more quickly? What the Fed is signaling today is that they are very concerned that the unemployment rate could start to accelerate higher. So to me, yes, this could be something that might unanchor inflation. I think it's way premature to say that. I don't think that's what's going to happen. But what it does signal that they are worried that there could be a faster pace of layoffs and job losses and things like that. So I think the markets, while they may be happy that the Fed cut interest rates, they might have to ask the question as why they're going as fast as they're going and what is the cause for that concern. So I think it is a little bit of a double-edged sword here.
Claudia, what about that very interesting point that David made, and that is that perversely, sometimes cutting interest rates can slow down activity as people wait for interest rates to go even lower?
Right. Well, the first thing I'd say is we know from this cycle already that the comparisons back to history are going to be really tricky. We haven't had a kind of easing cycle like what the Fed has started us into in a very long time. So and we've had a lot of what are Fed interest rates even doing in this cycle. So I think there is that issue. Now, markets, and this will be a very important part of the press conference today, is this messaging from Powell about going forward with interest rates. You can get that quote unquote forward guidance and have the market rates look out ahead. And this is a Fed that with a 50 basis point said, we are going to do this and we are going to be not necessarily aggressive, but we're really going to move on it. And I think that can show up in market rates and then help with that, behavior changing.
David, one aspect where I'm very curious about how markets and banks react is Americans have actually been making a lot of money on high rates if they have their money in money market funds, if they hold treasuries and so forth. Taking things down a half point doesn't change a lot, but it might just be enough. And I'm curious what your take is to kind of start moving money around and at the margin take a few dollars out of what's been a very lucrative place to park cash.
Well, I don't think it'll have that effect. I mean, I do think that it squeezes the income of older Americans just a bit. But what it does, I think it will introduce the question of, well, how much is the economy slowing? And that is not necessarily good for the equity market, no matter how much it, it positively responds to what they've just done today. I mean, as I say, I think the economy is strong enough to handle this. But overall, I think the messaging is very important from here. So in the press conference, it's very important that Jay Powell stress the level of comfort with inflation. Look, we've got lower gasoline prices down 70 cents year over year. We feel good about growth, but honestly, inflation's doing even better than we thought it was. So that's why we can move today. If he stresses progress in inflation rather than worries about unemployment, then he'll do the economy a great service. And I think that'll make this a much safer cut.
Steve, Claudia made the point, I invite you to pick up on whatever thought or tangent you would like, but Claudia made the point that this is a different circumstance. We haven't had this kind of initiation of a rate cutting cycle in a long time, certainly not under these kinds of circumstances. When we've had rate cutting cycles before, it's been in response to economic crises like the pandemic, like the financial crisis in 2007, 2008, 2009. Here it's a different set of circumstances. Economy's pretty good. Very little sort of idea that a recession is on the horizon. Talk me through that, if you wouldn't mind.
Well, Claudia studied history. That's why she's famous in our world. I've studied history maybe a little bit less, and I can tell you with experience that nothing works, Tyler, in terms of comparing this to any of the cycles. There have had a complete lack of analogs for the world we're in right now. Fundamentally, it seems like what the Fed decided is this was really a transitory supply shock, somewhat exacerbated by somewhat loose monetary policy, somewhat loose deficit spending. But if you hear the Fed talk now, much of the blame ends up being on the supply side shock that kind of worked itself out. A lot of that created a back.
Hell yeah, guys. I told you there'd be the initial manipulation and then there would be a drop thereafter, or not a drop, but I told you there'd be the initial manipulation and then a counter move. I took a short in ES and copied that across all my accounts just now. So up 600 across 20 some odd accounts there. This is why I was telling you guys, it's not as simple as up or down, right? Like you have to see what is the, when we trade, right? The way that we trade in the trading floor, we look for the manipulative move, right? And then try to counter that. So for instance, here, if we had, here, I'll show you. Oh, and I think we do have Mastermind later on too. But if we have this consolidation, right, this is the manipulative move. Now, I know what this yellow line is because I marked up my charts beforehand. This right here is the September high on ES. This yellow line is the September high on ES. So I was waiting to see what the initial move is, right? A lot of you are asking me, what's going on, Tanya? A lot of you are asking me up or down, right? And I don't one, I don't know. Two, I don't care, because the initial move is the move that I'm looking for, right? Like the market could have easily spiked down, and then I would be looking for the expansion to the other side, right? So the market ended up manipulating, and this yellow line here is the monthly high for the S&P 500. This is September's high. So we manipulated above that, and then started displacing below that monthly high, and came back up to this fair value gap. And that's where I took the short, right? Now, I could have held it longer. To be honest, I'm not really interested in big moves here yet until after Jerome is done talking, which will be in 19 minutes, right? So I'm not interested in particularly holding through what these clowns are talking about here, because there could be something said that could trigger another sort of news candle in a direction that doesn't suit well for me. So, you know, taking I took the scalp earlier before the drop, and then took the trade from here, almost a 2-to-1 trade down to here. So obviously we were listening to the stream, so the broadcast, so I couldn't really vocalize what I was doing, but this is why I tried to set you up beforehand and tell you what I was about to do, right? Is wait for the manipulative move and then play the counter. And no, I didn't know that we would manipulate up. We could have easily manipulated down, right? 50 basis point rate cut, totally unexpected. That is not true. Go back and watch my last video. I said that the Fed, in my opinion, was much, much, much closer to a 50 basis point rate cut than a rate hike. This is all Kamala problem. Bro, the low IQ comments. You understand that the market doesn't care who's president? You understand that, right? The market absolutely does not care who's president. They're both part of the same gang. The market will do just fine under either administration, because nobody's really going to pass anything that is going to hurt the corporatocracy. And you better believe that. Now, the one thing the reason that I think NQ can manipulate back up after Powell is talking is because of this. If you remember those September highs that I was talking about, if you look at ES took those September highs, right? Where is that yellow line on NQ? It's still here. Let me make it yellow just for consistency, or my OCD will start going crazy. That yellow line is right here. NQ is NASDAQ. That yellow line is right here, right? So we did not take September high yet. Now it definitely could leave it. Like, there's nothing that says that NQ has to take it, but my thesis to you guys when we opened up the stream was that we would manipulate both ways, right? You get because if you think of FOMC, remember, think of it as two events. You have the initial drop at 2, and then the Fed speech at 2:30. So there will be manipulation both ways. And that yellow line did not get tagged yet. And I think that it wouldn't be a 50 basis point cut day without NASDAQ taking that high. I do want to hear what Rick Santelli has to say in 1 second.
Talking about it, and granted the low is around 100.39, but the key here is any kind of a close under 100.5 is going to be a technical violation where we're almost guaranteed to test if we can hold up at 100, and it certainly looks like it's a possibility. 50 basis point cut, of course, is igniting issues with relationships to the dollar index, not only with the yen, but with the euro. Now, if we switch gears and we go to the 2-year, the 2-year was at 353. 353 before the announcement. It's at 357 right now. It's been as low as retesting. That was pretty much the low, right around 353. And if we look at 10s, they were around 359. They're higher, of course. They're at 365. Now, forgetting the numbers a bit, as you look at interest rates, a couple of things should jump out at you. Right now, about half the curve is above where it was yesterday on the close, meaning 7-year, 10-year, 20-year, 30 years or higher, but it starts.
All right. He is talking about bonds, which I think is important, and I do think that we get a bounce back up here, by the way. I do think that that level right there on the NASDAQ will get tagged. Now, you can be risky here, okay? So somebody was crying earlier saying, why didn't you tell me what to do? Guys, every person has a different experience level. Everyone has a different risk tolerance, okay? If you... What? Wait, did my Top Step not copy? You son of a bitch. If you wanted to, you can take a long here before Jerome Powell starts talking, okay? Off of this 15-minute gap. If you're asking me what I'm going to do, I already took the short because I felt like the short was a much easier counter move to the manipulation that we saw, right? So I personally am going to wait until Jerome Powell talks and wait for another manipulative move, right? I think the easiest way to trade FOMC is wait for the manipulation and then counter that. That, to me, is the easiest way to trade, and I've been trading FOMC for since they started publicizing the FOMC meetings. They didn't used to do this, by the way. Under the Greenspan days, under the Yellen days, Greenspan days, they didn't used to do this open market committee to the public. It would be behind closed doors, and then they would release the notes to the people. After, I can't remember what year they started doing it, but you know, now it's a public thing. So we get Jerome Powell talking in 12 minutes. Like I said, I do think there's a long off of this. Not my favorite type of play. I'm slowly making money today, and I'm okay with that. Up quite a bit on the day already, and not looking to fuck it up by entering something that is not predictable for me, right? Which is wait for the manipulation and then play the other way. Someone said I look tired. Dude, I was at the beach all day. Also, it's almost 9 a.m. here. I mean, 9 p.m. here. So not only was I at the beach all day, so one does get beat up by the sun and whatnot, but it is nighttime here. So I'm in Italy, by the way. I'm not in the U.S. Is rate cut approved? Who has to approve it? The manager? Who the fuck has to approve the rate cut? Jerome Powell's manager? Dude, he's the fucking chairman. He's the chairman for a reason. Mickey Mouse approves. Biden probably doesn't even know what's going on today, let's be honest. Yeah, so like I said, 50 basis point cut means interest rates drop, dollar drops, gold probably rallies. But there could be a manipulative move here too, right? But the reason that the dollar's dropping is because rates drop. When rates drop, the dollar drops, right? Cameron says kid tested, mother approved. Yeah, I don't know. I don't. Uh, Biden? No, I don't. I genuinely don't think he knows what's going on right now. If you took this long, you banked a shitload. That's 100-point move. Fuck, maybe I should have taken it. Have you come to Portugal? Yes, I've been to Portugal. India's enjoying right now. Enjoying what? You guys are throwing parties for the FOMC? Bro, I've never seen more national holidays than... I've never seen more national holidays than India. When I used to work in tech, every other week they were off, man. Because they're celebrating every religion. So all the Hindu religions and Muslim religions. And they celebrate all the Christian ones and the Sikh ones. And I'm just like, every week y'all are off? Do you have a CNBC subscription to allow you to watch from Italy? No, I'm streaming it from my neighbor. Yes. I wonder... I really want to take this long on NQ, I'm not going to lie. Maybe I'll take it in MNQ. I'll be a responsible little boy. But Powell talks in 8 minutes, man. What's the rate? If you cannot Google that, you should quit the markets. If you cannot Google that or rewind the tape, you should quit the markets. What are these questions? Welcome to YouTube, dude. Oh my God. This guy's about to get banned. Fuck this guy. Spamming the chat with his shitty crypto coin. This guy asks, is Italy close to Rome? No. Rome is closer to New Delhi than it is to Italy. Someone could be at work listening to you, brother. So what? The fuck do I care? That's good. I want them to listen to me at work. This stream is better than working. Do you follow EWZ? No. I'm at work listening to you. Hell yeah. If you're at work and you're listening to me, shout out to you. Appreciate it. Anthony Caronia. Thank you, brother. Did the rate cut happen yet? No. They pushed it till Christmas. Stay on the stream until December 25th. Jerome Powell in 5 minutes, guys. In 5 minutes. Why so angry? I'm not angry, dude. I'm clowning. I'm just clowning, dog. It's just funny. Holy shit, 22,000 people joined already? Yo. We got to do this more often. Yeah, 22,000 people, only 560 likes. Hit that like button, guys, so that other people find this. Appreciate it, Joe. Appreciate it. For those of you just joining us, I took a short on NQ off of this manipulation, and then I took a long initially on ES. And looking for a trade after Jerome Powell's done talking. I think that gold will, like, this is gold's manipulative move. You see this? This consolidation. And we manipulated up here. Unfortunately, up here doesn't mean anything because it's an all-time high. But I will be looking to see if we get a closure below this gap, because I do think that gold will have a potential manipulation down. Maybe. How do you do a short? Probably shouldn't be trading real money yet if you're asking that. It's okay to be a beginner, but probably shouldn't be trading real money. In order to short, you just sell something to open. No, I wouldn't sell gold here. No, not yet. Jerome coming up in 3 minutes, guys. Huang Lee donated $20. Appreciate it. Do you think the markets will run 50 basis point midterm like next half month? Obviously, you're asking because what, you just want to buy calls. I do think that we will get back to all-time highs on the Nasdaq. S&P already made an all-time high yesterday. Apple looks weak. It's up 2%. Y'all are crazy, bro. Our Tesla call spread is doing good. It's up 25%. We opened a Tesla call spread. When did we do that? I opened a Tesla call spread last week. It's up 25% right now. No, it's not time to short gold. Or calls like a phone call. Yes, calls are like a phone call. Guys, if you want access to the live day trading, I go live with the team every single morning, just like this, but with the Discord, it's a much smaller group. If I did it on YouTube, I'd go insane every single day. Shout out to those of you, Matt, Tanya, who go live on YouTube every single day. I probably would be in Arkham Asylum if I did that. But link is in the description below. So if you want to go live with me every morning, sign up. Yes, do not short gold. I don't know how many times I got to say it. Do not short gold. Not yet. I think there will be a manipulation down, but let's listen to Powell, guys.
We have to leave it there, Claudia, as the chair is now ready to speak. Let's listen.
my colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance. and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed that made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. Again, I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher than Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%. Inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard Schneider with Reuters. How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I'll get back to Powell in a second, but I was drawing my setup for you guys on the screen and showing you my entry to the tick, guys, to the tick. 12.20 per contract on gold to the tick. I told you there would be that even gold manipulates, right? And that there would be a counter manipulative move, i.e. the real move after this manipulation. I'll explain this trade in a second, but I want you guys to hear Jerome Powell. Hope you guys took it. For those that were watching my screen, I drew it all out for you, showed you my entry, etc. Nothing more clear than that. To the tick, guys. To the tick. Yeah, it is like magic, and I'm very thankful for this skill. I'm very thankful for this skill. Let's listen to Jerome. I'll explain the trade in a second, guys.
Sort of follow up to Steve on the pacing here. Would you expect this to be running every other meeting once we get into next year? For example,
we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start. But and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Hi, Chair Powell. Gina Smilik, the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions in there. But so I would say we don't think we're behind. We do not think we're behind. We think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level. And we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply here, given that other metrics of labor demand have softened too? And I guess
What is he really answered? He hasn't said anything poignant.
Deterioration in labor market conditions if policy is still restrictive.
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. meant by many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market. But this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a?
This is such a good question.
That's, our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that. And we're not hearing that from companies, that's something that's getting ready to happen. So we're not waiting for that. Because, there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So. And policy, we think, is still.
All right, this guy, you could tell he got a good night's sleep because he knew he was going to cut by 50, which, is there a long on gold now? There might be a long on gold here, guys. We manipulated into that fair value gap. Remember, I talked about the double manipulation. Jen, I'm happy you made almost $800. That's amazing. There might be a long on gold here, guys. I would like to see a close above that order block for a CISD. It really depends on what model you trade here. So if you trade an IFVG model, you would already be entered. If you trade a CISD model, you'd wait for a close above that. But I think there's a long on gold. What are the data highs? Let's see. I'm not too confident about the daily high, to be honest. Where's the 2-to-1? 2-to-1 would be that high at 26, 21.3. NQ and ES are stalling out. What is the dollar doing? Okay, dollar's dropping here, so that could give us some runway. 2621.3. That's my target. That might be an ambitious target, but if the dollar keeps dropping, the thing is the dollar does look bullish too, though. But if it drops down to here, we could get a move. Honestly, I'm not confident we'll get all the way up there. Maybe there. 2617.5. Let me see. We are in. What time is it? 2:50. What's interesting to me is NQ or ES are still hamstrung here.
Ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question, you mean after we get through all of this? It's just a great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. It's again, we only know it by its works.
One more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it.
Half point means 50 basis points. I thought rate cuts is good for Tesla. Okay, Tesla's up 1.5% today. All right, I think there might be a move coming up on the indices. As Powell gets close to the end of his speech. This was my one and only position that I took on GC. I think you're late on TLT once again. Also, what happens today is not indicative of anything that will occur in the next few months. Equal lows on NQ. I think those equal lows get taken out on NQ first. Which one is better, gold or NASDAQ? What does better mean? It's not garbage PA, man. You just gotta know when to touch it. This is actually really good PA. I really want NQ to take out these lows first. Okay, let's see here. Let's see here. Not yet. Not yet. What will happen to the market tomorrow? I don't know. Go to a tarot card reader. Does this happen every single time? What's this? Man, we need NQ to make a decision. Either take out these equal low. Okay. It just took out the lows. Okay. It took out the equal lows, which were also the data lows. No, dude. Don't. Just wait. Just wait. What happens next? Already traded twice today, Kranz. So I'm not sure what you're referring to. Cash secure put for BA, good one. There's nothing secure about BA. VI and gold and daily FEG, yes. There is a VI right there. You're 100% right. Did Powell say something they didn't like? No, this is called manipulation. This has nothing to do with what he said. What price to watch TLT? You're too late on TLT. Why are treasures go up? Sell the news. Treasury is a market, just like anything else. All right, we hit that daily VI on gold. What trades did you take? Scalp ES long, gold short. European market red as well. No one cares about the European market. Which platform do you use for day trading? This one. Yeah, I also told you to buy TLT in November, dude. Did you listen to that? You took those trades in the morning or live here? Here. What's this platform? TOS. Said it already. Why the sudden fall? Manipulation. Selling trend is found. It's just manipulation. Manipulation up, manipulation down. No one cares about the Indian market, with all due respect. And I definitely don't. Contracts don't have prices. They have leverage. Margin. Should I go long or short? You should close your account. Yes, Shelly. We trade live every day. VIX is flat, yeah, surprisingly. I'm just joking, dude. I'm just joking. pre-flop. I'm just joking. I don't trade NQ. Will there be other trades? Well, you should start trading NQ. So we took data lows on ES, NQ. Gold is in that daily VI. Looking at a potential long on gold. Hang on real quick. Does gold want to go long? I'm really hesitating to long gold here. We already took yesterday's high, but we have equal lows up here. Or is it better to take out NQ? We might see the manipulation back up to take those data highs. We took the data lows already. Ichimoji. People are trolling me all day, bro. So I just troll back. It's not a big deal. No need to get butthurt. Yeah, dude. If people are trolling me, of course I'm gonna jab back. It's just a part of being online. I wonder if there's a NASDAQ long here. I really want to see a trade back to these data highs, but yeah, but all right. I really want to see if there's a long here. That's a 46-point stop. Fuck. All right. What? Market is going to close in 40 minutes. Yeah, I told you don't long this yet. No, dude, no. I think my internet's lagging, man. Fuck. The trade cut is disappointing. The rate cut? Why? That's literally what was projected by CME. Drop to 1 minute so I can see. Why don't you do it on your chart, dude? And those of you who are overreacting to this short move by this initial move by the market, like I said, what happens today is not an indictment on what's going to happen. You're going to get manipulation both ways. We got manipulation to the upside and manipulation to the downside. So, and the market is basically flat as shit. ES is up 0.03, NQ is down 0.03. I gotta close this shit. All right. I already told you TLT would go down right after the rate cut. Watch my last video. Squidward's gonna make sure y'all go broke. You're too late on TLT, man. You're too late on TLT. You need a major retracement to make it worth it. Yeah, Squidward's going to make sure y'all go broke. Volume doesn't matter. How come stocks are going up? Who predicted these types of questions? Seven, 3, 8. 920. This shit is gambling if you don't know what you're doing. I agree. I agree. Which is why, you know, you're seeing everyone say, tell me what to do. Tell me what to do. I agree. I mean, it's, you got to put in the work. Everyone wants an easy answer. It's not easy. I don't know, the last 30 minutes of the market, I honestly think since we took out those data lows, those data highs right there are the target for the indices. I don't know that gold moves a crazy amount. Half an hour. That's not an hour early. Low high 17,706. Market closes in half an hour, dude. London low. Yes. 2. Six, 5, 8, 50. Doesn't bounce from here. Take it in MNQ. $705. Is your internet cutting out? Oops. No, not yet. Yeah, I don't know that there's any broad-based trade here that I would take besides scalps, honestly. Do I have a promo code? No. Not at this time, no. We are exactly at 0 on NQ and ES. That's wild. Kent says 6 prop accounts over 1,000 today. Good job. Could sell off till close. I don't think so. I think you're going to get these just wild up and down moves, honestly. Almost burned all calls and puts today. Yeah, that's why you don't trade options on days like today. Yes, I think aftermarket will move today. Still believe NASDAQ will hit all-time high? Oh my God. Because of what? Because it's at 0% today? Just what happened in the last few minutes? Young Go TV. I 100% agree with that. So what do I think is going to happen? NASDAQ was supposed to rocket today. Imagine thinking that. Something that's been priced in for months. We hit all-time high on the SPY today, but that's not good enough for S-Crans. But the SPY hit an all-time high today. Gold hit an all-time high today. The Dow Jones hit an all-time high today. The only thing that hasn't hit an all-time high today is QQQ. We're still down about 5.5% from highs. Yeah, I do think we will eventually get there, but I mean, that's not that big of a deal, to be honest. You know, I do think that October is going to be pretty ugly, to be honest. And I do think that the Fed is clearly waiting for unemployment data to see what to do in November and December. I think they're happy that they cut today. But remember that rates are still, 4.25%. So it's not like they're going to go back to zero. And the market thinks and wants them to go back to zero, but it's not like they're going to go back to zero. Yeah, that's what I think. That's what I think is going to happen. But yeah, SPY hit an all-time high today. Just like how we had the 50 basis point rate cut in 2007, we rallied 5% and then a drop. 2001, we rallied 5% and then a drop. I think it's really going to be dependent on the unemployment data. But no, I mean, a 50 basis point rate cut, in my opinion, is not bullish. Have you ever traded before or only talk? Imagine being as dumb as this guy. As Kranz, the most emotional dude in the chat. Every single candle that's moving, he's crying about it. Why is it going up? Why is it going down? There's your trade for today. What did you do today? What did you do today? Ask Kranz. Let me know. Besides suck on the baby bottle that your parents gave you, what did you do today? He said he cleaned his bedroom today. All right. Yeah, I don't know that I'm really interested in taking another trade today, besides the gold short and the ES scalp short from earlier. Tomorrow, maybe will happen in the overnight session. I don't know, but at some point we will target these data highs, right? So what I'm going to be looking for tomorrow is to see if we manipulate to these data highs during Asia session or during London session, right? And then you'll probably see a continuation in New York, or if we don't manipulate to take out these data highs overnight, then I think we will likely do that tomorrow. So I will be targeting those data highs at some point, right? I will be monitoring to see if it does it overnight, or if it doesn't do it overnight, then likely we'll do it during New York session tomorrow. All right, guys. Appreciate you joining the stream. I will catch you on the next one. For those of you in the Discord, I will see you tomorrow morning for the live trading at market open. So that's what we'll be looking towards. 50 basis point cut by the Fed, just as somewhat expected. I can't say that I was 100% sure, but that's the way that I was leaning. Yeah. Gold short. Man, would have paid if we just held it. But I appreciate you guys. I'll see you guys tomorrow. Peace. S. Kranz, go drink another bottle, bro.